To some of our earlier guests there on the sell-off that we've seen in the US session. Let's get some more insight now on those moves. Our next guest says stretched valuations may be causing markets to take a second look at tech. Joining us now is Wealthwise Financial CEO Loreen Gilbert. Loreen, we're also expecting, of course, to hear from Fed Chair Powell this week in his testimony. He's expected again to reiterate how virus-dependent the recovery is and that there is a long way to go yet when it comes to how quickly and how resiliently the US economic recovery will go. Does that mean, though, we still continue to see the, I guess, decoupling between the real economy and what we see in the euphoria of markets?
Yeah, I think we're experiencing right now a number of things that are affecting the markets. One is a stimulus tantrum that we haven't received any new stimulus news in the month of September, which we've been awaiting. We also have this talk about increased lockdowns or relocking down the economy, and what that really means in the markets is that there's going to be a decrease in demand if people get locked up again, which would mean we'd need to go to a risk-off move, and that's what we've seen in the markets certainly today.
So let's talk about tech, because we talk about this market nearing a formal correction. You take a look at the valuations that we still see across a lot of the tech darlings. These are stocks that are still up between 50 and almost 200% year to date, right? Can we really say that we're close to any kind of a bottom, or do you just find that re-entry point if you're not already invested in these names?
Yeah, I think that certainly we've said all along that technology is the way of the future, and it has been the area that recovered the fastest and was on the leaderboard. But when you do look at those valuations, we're still remaining above our averages over the long term, and it really puts us in valuations that exceed our 25-year averages. So when you look at that, you have to be cautious. Having said all of that, I think that this is somewhat of a normal pullback in the markets, and that's good for the markets to kind of regroup again. And so for those investors that thought they may have missed out on opportunities in technology, this is the time to be looking again at some of those darling names that investors want to hold and look for opportunities to buy in as they pulled back quite a bit. So I would say look for those as ways to enter into the market.
No wonder we are seeing so much volatility, right? Tech volatility, according to this GTV chart on the Bloomberg, surging to almost the highest level since the bubble, dot-com bubble era. And even today, we had seen dip buyers again getting into the markets in the afternoon, that bullish reversal in tech. I gotta say, though, how risky is this narrative when we're looking towards a presidential election, and no matter who gets elected, whether it's the Democrats or Republicans in the White House, we are expected to continue this discussions of antitrust that no matter who is in Congress and the White House, these conversations are just expected to ramp up.
I completely agree with that. I think that no matter who wins in this election, there is volatility leading up to the election and potentially after the election. Whenever there's uncertainty, the markets don't like uncertainty. And right now, there's quite a bit of uncertainty when it comes to antitrust that you just mentioned that would affect those large cap tech names that we've seen, as well as potential tax proposals that could impact corporate profits between 5 and 10%. Looking at all of those things has the markets nervous. So I would say for investors to continue to look for more volatility through this fall period of time leading up to the election.
In the meantime, given that we continue to hear that the economy remains supported by not only fiscal policy but also monetary policy, when would it be time to get into those cyclical names and also some of those value names?
Well, that's what we're talking to investors about, is look to the other areas of the market. And even today, some of those areas got hit pretty hard. When you look at industrials, materials got hit, financials got hit, and yet those are some of the names that could be the leaders of the future. I would say where we go from here when we're looking at market drivers is the market is looking for fiscal stimulus as well as a vaccine approval. And when we see that happen, which I do think we'll see both of those happen, who knows, sooner or later, but when we do see that happen, the markets will respond in a positive way. So even with all of these headwinds that we're looking at today, whether it be increased China tensions, stimulus questions, and lockdowns, what we know is the recovery is taking longer than we all had hoped, which is what we said all along, that we expected some kind of W-shaped recovery. And with that, expect that W and then know that we'll come to the other side. And we do think there will be a rally on the other side of this once we do get that vaccine.
Right, Loreen Gilbert, always great having you with us, Wealthwise Financial CEO.
Thank you so much.